right. Welcome back, everybody, to another episode of Built to Scale. And I am super excited. We have a guest on today, Chris Daugherty. Welcome to the show, Chris.
Hey, Mason. Thanks for having me.
Yeah, really appreciate you that, we're doing this on a Friday afternoon, and I'm already thinking of college football tomorrow. And, I don't know who all is playing yet, but that's more so where mine's at. So I know you mentioned a little bit earlier, you're looking forward to rest and relaxation soon. So thanks for doing this with me on a Friday.
Usually my relaxation, I sit in front of the TV and watch college football pretty much all day. So
Yeah.
you can unwind.
That is the best rest there is. Yep.
Absolutely.
So let me ask, who are you a fan of? Who's your team?
I'm originally from Chicago, so I'm a Big Ten fan, and I don't really have a team because unfortunately Chicago, so you're going to be
You're not an Illinois fan? They're doing pretty good this year.
I am a fan of Illinois, but Michigan, for some reason, I've always been a big fan of Michigan. But any Big Ten team that's playing, that's usually who I'm rooting for.
Good. So Ohio State's still going to go the national champion, but you guys are going to beat them again this year, right? That's the goal. Just make sure that Ryan Day actually is out of a job this year, even if he wins 2 rings back to back. So,
sitting in the great state of Texas, I'm always competing against most of like the Alabamas, the Texas A&Ms, but I always go Big Ten. They never disappoint me for the most part. So, yeah.
Yeah, no, Big Ten came out strong last year with Ohio State, and they're on the same path this year with Indiana, Illinois, all of them. Like they have some strong programs in there, so it'd be interesting to see how it shakes out. So good stuff. Well, yeah, to our audience, Chris works with a really reputable firm called Ryan. That Ryan specializes, if I could summarize it, in tax, right? But in all different types of different forms of tax that I think, for our audience that, we've been going through elements of the big, beautiful bill, but realizing that there are some things just out of the breadth of just your local regional CPA that they may specialize in income tax returns, potentially filing your property taxes, et cetera. And they may have specializations elsewhere, but then, we've really explored with our audience of diving deeper that, hey, there's firms that specialize in R&D tax credits. There's firms that specialize in green specialty incentives, that some of those are fading away, but that there were firms that specialized in that. So Ryan is an international firm, a global firm with a footprint literally all around the world. Chris is the Texas and Louisiana representative, though, but that Ryan is a global footprint with tax experts in regards to all different types of taxes that businesses could face, that contractors could face. So I'm just really excited because I know you have your specialty, but Ryan is really unique in that you see a lot of these firms that are have these very niche specialties, and this is what they focus on. But you all kind of cover the full gamut. I think, we got connected through Madison, and I think I'm going to have to make sure that she gets her plug in here on this too, right? So
when people are asking me about what do we do, I always just break it down that we're a global corporate tax specialist. Anything corporate, whether you buy, sell, own, operate, manage, in any form of that, if you pay taxes, we can pretty much help you out with.
So what we're diving in today, there's plenty of topics that we could talk about that Ryan, I could probably have multiple people from all the different departments of Ryan on here that could apply to contractors, right? But, one of your specializations, and really why I wanted to bring you on and to even give some context to the audience, is really property tax appeals, and making sure that, contractors, developers, et cetera, are very aware of these opportunities. To provide some context to the audience, I was telling Chris this, that, I'm one of those statistics that's moved from California to Texas very willingly and very proudly. I don't know if I get to call myself a Texan yet, but I sure say y'all all the time. So we're good to go. I can fit in now. But in California, income tax was everything. The state income tax was very hard, as well as, honestly, the fuel tax as well was a big thing. Property taxes were so-so. I mean, it wasn't that they were great, but they weren't bad either. In Texas, that is how the state produces their revenue, through various property taxes and the municipalities, et cetera. That it was even a learning experience just for my own home of, it's not that you just pay property taxes to the city or the state. There's a couple of different entities in there that you have to pay to, whether it's, your water district or your school district, et cetera. There's a lot in there. But people face much higher property tax bills in Texas. And so this might be, for our audience, might be a little bit segmented for, Texas and potentially considerations of states with higher property taxes. But yeah, I loved it that, like I was telling Chris before this, that I thought it was kind of scammy that, I would open up my mail and I'd see these, companies that they would help you do a property tax appeal on your house. And I was a little bit skeptical at first that, like, hey, is this legit? Is this real? But also too, I was a little bit worried that, hey, like, yeah, but if we ever sell, like, I'm a little bit worried about what this will do to, the appraisal value, et cetera, and all this and that. I had questions, but it was really cool. My wife applied for it, and we easily knocked off a few $100 off our property tax bill a year, which makes a dent, right? And at the time, I didn't even click that, wait, like, okay, so this is real property. This is my home. Well, businesses are facing this all the time. And then I talked with, sorry, I said Madison earlier. It's Morgan. But I was so sorry. I'm going to have to say sorry to Morgan here. Maybe Cindy, my editor, will have to clip that out and replace it with AI or something. So I don't know why I said that. I talked to Madison yesterday, but Morgan was talking about Ryan Services and property tax appeals, and that you all do these on a contingent basis. And I said, whoa, we got to talk about that. So for the audience, that's kind of the long-winded background to wanting to get Chris on the show, so that really making sure that, you all are aware of what's available to you, that you should not be paying property taxes higher than what are relevant. We always want to encourage that, hey, you're going to have to pay your taxes that, are applicable and relevant to you. But at the same time, we don't want you to overpay. And so I'm interested, Chris, that I've kind of sat here and give, a long-winded intro here, but really interested kind of how you begin to dissect for contractors, for developers, property taxes, how they're, any differentiations of them, and particularly what you do. So would love to hear from you on that.
Well, again, thank you for having me on here. I've been in property tax for about 18 years, really dating myself here. So primarily on the real property side, but in Texas, and we'll kind of dive a little bit into the why property taxes are so high in Texas, and kind of stick to a little bit to that. So for the last 18 years, anyone that has either land or anything that is vertical of land, structures, et cetera, that is considered real property. If you take a building and you turn it upside down, and anything that falls out of it is considered personal property. If you are running a business like a general contractor and you have machinery, bulldozers, any type of tool supplies, anything like that, software, all of that is considered taxable, because it is something that you're using to generate income as your business. So that falls under the umbrella of the personal property tax or business personal property tax. You have to pay taxes on those things, whether it's the real estate or the components thereof. And the reason of that is Texas does not have any state income tax. You kind of alluded to it earlier. So since there's an absence of state income tax, they use property tax and sales tax to really generate the revenue that's needed to pay the municipalities, to, build roads, just kind of the maintenance and operation of the government, if you will. And then, as you mentioned, you have the different jurisdictions. You got the county, you got the school district, you have MUDs, you have public utility districts, you have TERS, reinvestment zones. All of those things they're funded by the property tax system. And people always ask, well, why are my taxes so high? Well, that's part of the reason, is because you don't have state income tax. So you got to fund these different organizations and governments. Now, what's interesting about the general contractor space or the developer space is, there's a lot of things that you can do to offset those taxes. As a personal homeowner, you have your homestead exemption. So that alone helps negate some of the taxes that you have. But as a business, if you're not able to pass through those taxes to your tenant or, someone that is utilizing that space, your sales tax, you're going to have to pay that, but you can always pass that through the end user on a resale certificate. But with real property, if you own real estate, whether it's a slab of land where you're holding your equipment or the building itself, you're going to have to pay taxes on that every single year. And ideally, you want to try not to pay market value for it, if you will.
I like that concept, not pay market value, right? I mean, it's that idea that, yeah, I mean, just because you spend 100 grand on something, 2 years ago, if it's a heavily used asset, it ain't worth 100 grand anymore. And so should you still be paying 100 grand's worth of value on it? I mean, that is the physical concept here, that what is that thing really worth? Because from an accounting perspective, it's the easiest thing to just record book value. Like, what was it purchased for? You can't have your team go and, constantly look up market rates. And even then, you wouldn't want to pay a market rate for a new. They'd have to look up market rate for used with all the mileage or the usage, et cetera. And like, no, like that's too much. And so, to your point, it's about paying the appropriate tax on the relevant value of the property itself, knowing that, yeah, you're going to have to pay it, but not at full market value. Right. And so, yeah. Can you dive into that further? Like, because this is kind of the idea is, a lot of people do have that book value that they're recording on their property taxes, right? They have that book value. So how do you go about your work of trying to appeal and trying to reduce those liabilities for business owners?
So very similar to like well, not similar, but in California, you have your Prop 13. So it's true market value, and then it increases by 2% every single year. In Texas, everything is based on January 1. So if you own something as of January 1, you will be paying taxes at the end of that year based on that January 1 market value. Whether that's what you paid for it or that's what these things are necessarily trading for. So on a real property side, if you have a building that is currently existing and what the county, well, let me break it down a little bit further than that. So you have three components to the property tax system. You have the county appraisal district, and their sole purpose is to determine what is market value, whether it's the real property or the personal property. That's what they are. That's their structure. That's what they're supposed to do. What is market value? Provides you with their determination of market value, and then they're the forum where you can file an appeal to try to fight that market value. Then you have the state comptroller. The state comptroller is kind of the governing body, and all of their job and their responsibility is to make sure that the county is doing what they're supposed to do. And then there's the tax assessor, who is the one that actually collects the taxes, creates the tax bill, and make sure that all the municipalities are paid from all the collected taxes. The state comptroller governs them as well, and they have report cards making sure that they're doing all they're supposed to do. So when you have the different components, the appraisal district is determining market value based on January 1 and making sure that the process is what it's supposed to be. Then you have the tax assessor that is working with the different municipalities to determine what is the budget that these taxes are, what is the maintenance and operation budget that is approved by the state. They're making sure that the taxes that are collected is then paid out to those municipalities. Okay. And then again, the state kind of governs all of that. Giving you the backstory so that you understand that when the county determines the market value, okay, when that value is then reduced at the appeal, it's reducing the amount of taxes that the municipalities will have. So obviously, they're trying to make sure that they're collecting the right amount of taxes so that that budget can be paid, right? So they're going to fight you tooth and nail to try to get that value. But there are certain laws in the Texas Constitution, every state has them, that allows the property owner certain remedies to try to reduce the amount of taxes that they pay. It's not so that they can not cover the budgets. It's just, I want to make sure that I'm being treated fairly, and I have these particular remedies, which is filing an appeal, filing an abatement, filing exemptions. All of these things are remedies to try to help offset whatever cost that you have to make it business friendly, if you will. So the process, very simply, is January 1 on real property, try to figure out what your market value is, look at comparable properties, and then by May 15th, you have your deadline to try to file your paperwork to fight the assessment, the original assessment. Tax bills, whatever happens in that appeal process, tax bills come out in November, due in January. Hopefully you're not paying true market value. You have all the right tools in order to do that, or hire the right consultant to help you do that. On the personal property side, again, it's what you own as of January 1. You have to file a compliance document that's called a rendition by April 15th. And what that is you are providing your fixed asset list of all of your machinery, equipment, supplies, inventory, etc. And you're basically filing that April 15th to the county to say, this is what I own, this is what the market value is. Now, what will happen in that particular case is the county, with that information, they have their own internal depreciation table, market value for each one of those assets. They will look at what you file versus what their records show. And if everything aligns, no harm, no foul, you're good to go. But if their market value is higher, most times it is, yours should be lower because of either rapid depreciation or, market value of a particular asset is not, trading at what they say it is. Now you have an opportunity to file an appeal and go in there and show why you think it should be lower than what their market value information shows.
From a theoretical concept, I mean, like, especially civil contractors, it just with their big machinery, like, man, this is monstrous for them, right? That especially if they put a lot of usage on this, because just thinking through this, like general contractors, depends upon how much direct work they do. They tend to sub out a lot, and then they have team members with vehicles. So maybe vehicles they could go after on the personal property side, et cetera. Subcontractors tend to have more machinery because they are performing the work directly. Tends to be that way. But yeah, like civil contractors with those big units, et cetera. That like this is their equipment. This could be a game changer for them in terms of just a lot of money saved. I'm interested though, like on the real property side. So yeah, piece of land, an actual building itself. Like you said, I love that definition is you take personal property as if you were to take a building, shake it out and all the little stuff falls out. That's a personal property. But say on the real property, um, walk us through a little bit because theoretically the concept of like with personal property, a piece of equipment and it being depreciated totally makes sense. That you have used that piece of equipment, and so there's no way that its market value is anywhere near, like its market value today is anywhere near if you've been using it heavily versus the price that you purchased it. But like on real property, um, walk me through the process of like what are the comparisons? Like how do you really try to defend and try to make sure that you're not paying extra tax, or am I missing something here on the real property side?
Well, you would think it's pretty straightforward. You know, the thing is with commercial property, usually you're never going to have two buildings that are exactly the same size, same square footage, number of floors, all of those things kind of differ when you're talking about an office compared to another office building, a retail compared to another retail. There's going to be usually some type of nuances that makes them different in one way or another. Then you have market areas. So the amount of rent that can be collected in this particular market area may be different here. So there's those fundamental economic fundamentals that creates the differences between the two. So when you're looking at comparable properties, ideally you want to try to find something that is close in size, age. You're talking about an income producing property that has tenants and, is being leased out, comparables as far as lease rates are concerned. And that's how you can look at what is comparable to my property, trying to find those particular properties that have those similarities.
I think one of the questions, because you and I were chatting a little bit about this before I hit the record button, and I didn't get an answer to this on the home side as much, but we also are committed to living here for quite some time, so I was cool with it. But because right, like from a real property standpoint, especially if you're trying to mortgage it, you got to come in, you got to have an appraisal done to be able to determine that for the bank, what is the actual value that they're lending against, right? And that they're not going to lend in excess of, they're going to, take your down payment, but they're not going to lend in excess of that appraised value. That anything above that appraised value is probably going to come cash out of pocket, et cetera, et cetera. but yeah, especially when say you're trying to sell a piece of property, I I'm just a bit concerned, but I might be uneducated about this, so please educate me. But the idea that you're trying to fight, for your appraised value to be lower, or from a property tax standpoint. And I don't know how much of that is taken into account when they actually do the appraisal, when you actually need to sell the property. The buyer is doing the appraisal, is they're looking at those records and they're kind of using them as a baseline, right? Because it's the same idea. I mean, I figured, and I don't mean to over assume about what appraisers do, but it's like I've been on the business appraisal side, and the first thing you do is always look for comparables, right? Or comparatives, that you always look for comparative examples. What did that business sell for and why? And that's probably baseline, right? So I would assume that from an appraisal standpoint, it could be potentially pretty similar. And I guess it would kind of worry me as a property holder that if I have intention of essentially selling this property one day, could I be limiting myself by driving that value down? And therefore, when somebody needs to get financing to buy it from me, they're going to have a more difficult time getting that financing if it's driven down, when I'm going to try to push for a market value that's in excess of that appraised value now, right? I mean, that's always the way it works, is I'm going to push for a price above that now. By me pushing it down from the property tax perspective, but then when I actually go to sell, I'm looking for this gap. Is that a concern, or like, am I just looking at it completely the wrong way?
It's often misunderstood because what you see as market value on the public website, it is not a realized true market value in an appraisal world, or, transactions, true transaction value. The reason of that is, as I mentioned earlier, is you have a market value that's based on sales, but then you have what's called in Texas a equal and uniform. And that equal and uniform is looking at, for residential, if you have a whole block and every single one of those properties are exactly the same, number of bedrooms, sizes, the whole nine, technically they should be all valued exactly the same. But if one has a pool, one has an outdoor kitchen, one has one extra bedroom, maybe there's a little customization here and there, then that could create a different value. Well, you have to make adjustments to make it equal to yours. So those adjustments could either bring that value, your value, up or down in comparison to that property. Okay. And without getting all into the nuts and bolts of it, bottom line is, there sometimes you will have valuations that are well above the true market value because of those adjustments, or because it has been lowered to be equal to other comparable properties. So when you're looking at the county's website, a lot of people think, oh, well, that's exactly what my home will sell for. No, because you will be looking at it differently when it's time to sell the home. You're going to be looking at true market sales closer to the time of that transaction, versus, again, market value in Texas is based on January 1. So what homes are selling for in your neighborhood January 1, if you're looking at selling your home in October, the market could completely change, and that also could change market value. So never look at the appraisal district's website to determine what my home would sell for or how I should price my home. It's a guide, but I wouldn't necessarily use it as kind of the gospel. A lot of variables there.
Yeah, no, and that's what I just want to be sure of. It's just, again, I hate to put an anchor in place that, um, because the world of tax, right? That, I feel like timing decisions are everything too, right? And so I just want to make sure, is there a timing factor that should be considered to property tax appeals in this? But if you're saying that, yeah, your feeling is not that big of a deal, then all good. So, yeah, what else would you feel like? Oh, go ahead, Chris.
I was going to add another thing is, a lot of times people are looking at their neighbors' properties and they're trying to say, well, why is their value lower than mine? Well, if that person filed an appeal and you did not, you never know what information that they use to help get it down. It can be maintenance or deferred maintenance. It could be, something that's different that just creates a different valuation as yours. So never look at it as a true comparison.
What else would you feel like our audience needs to know that I haven't asked about, or I haven't touched in regards to property taxes? obviously, this is very Texas specific because, like you brought up, like there's California Prop 13. I'll leave that back in California where I left it, right? But all of this is so state specific that it's like you talked about bringing forward the Texas Constitution, how it's written out in regards to the different entities underlying the different bureaucracies that make this up and that you have to work with. So some of this is so state specific, but do you feel like there's anything that, is just one of those things that you just wish more people understood and knew about property tax or property tax appeals that you just like more people need to know about this?
Thing, cannot stress this enough. File an appeal every year, regardless. But if you don't know how to go about doing that, hire a specialist. Okay. And then if you are a developer or if you are building something, keep in mind everything is based on a particular what they call an assessment date. And that doesn't matter what state it is. Every state has their own laws, but they all have an assessment date. And it can be either a 1 year reassessment, or it can be a 2 year reassessment, it can be a 4 year reassessment. So know how often your property will be assessed by the county, know what date is that lien date or that assessment date, and then know what date is the required date to file an appeal, and file an appeal if you can, because if you think the tide rises all boats, well, same thing if you file an appeal and everybody else in the neighborhood or in the area files an appeal, so does your taxes. They all can come down based on that equal and uniform concept. If everyone else is low, then you want to be as low as they are. And a few little other tidbits that I would all state that if you own real estate, um, keep in mind things that are helpful to your appeal is if it's an income producing property, what is the occupancy, rental rate, and everything based on that lien date and not current date. If there is any deferred maintenance or damages or anything based on that lien date, make sure you bring that to the forefront. If you're talking about business personal property, I'm just going to use a vehicle as an example. If you purchased it December 1, let's just call it $1 million. The market changes and everything is tanked by January 1. Well, your value should be reduced as well, based on that current market date, even though you paid X amount of dollars for it back in December. Now, you would have to fight for that. Sometimes the county will go back 2 years to look at market value, but again, circumstantial information, damages, mileage on a vehicle also factors in, the condition of the property. What is the market rate for these things now? If you had to fire sell it today, even though you may have paid for it, down the line, what is it worth today? Having all of that information, having documentation, pictures, anything that you can provide, reports and things like that is always very helpful to an appeal.
I think that even you revealed to me, and I would just encourage our audience, like I'm not a property tax expert, but you brought up many concepts that I feel like we could even go down further of like, hey, explain that, all those dates, et cetera. But realizing, and you've done it by no means intentionally, but just it's very clear that, working with an expert in this is really important just to be able to get the help that you need. And so, I know a lot of business owners out there that, they just figure, hey, I can get this done myself and I can try to do it myself. And this is not one of those things that I would encourage. And I'm not just trying to put a plug for Chris and Ryan here and his firm, but rather it's just really, this can get complicated because it's state by state specific and it can get complicated, especially this gets more complicated if you're a contractor or a developer that's multi-state, right? Because then you have to understand all the little nuances of having all these pieces of personal property or real property in all these different states. And so just making sure that you get the expertise. I feel like I've walked away from this conversation that is critical because each state is nuanced differently. And it's important that you get people that really understand that well and how to defend that well. And so just really appreciate having you on, Chris. I think that this has been really enlightening, at least for me. I hope so for our audience as well. So I really appreciate you.
Something in closing is, anytime you're looking at your tax valuation, if you're prudent enough, then you would get with someone like myself or an expert in that particular market area, because there may be additional things that may be helpful to you. There may be exemptions that can be applied. If you have solar that's been applied, or wind or anything like that, or green energy, there's a lot of incentives now out there for green energy, R&D tax credits, land exemptions because of agricultural. So there may be additional tax saving measures that can be applied. And it's just always good to just consult with someone, even if you decide to do it on your own. Consult with someone and just see what's out there available to you, because you just never know. You might be leaving money on the table.
Yep, agreed. So no, I sincerely appreciate you, and I don't disagree at all that we do the same thing with any one of our clients, that we're reaching out to the CPAs, at least their regular incomes tax and CPA, but as well as any experts that we can think of that to bring to the table. That when we're like we have one client that's buying a piece of real estate right now, and hey, what are all the things that we don't know about where this property is located, et cetera? What should we be considering that we have no clue of? And if we don't get this done before the property is purchased, could be a real stinger for us, right? And it's just good to ask those questions, to not assume. That I always tell people, right? We all know what happens when we assume, right? So yeah,
Sometimes you don't know.
yep, exactly. So just really appreciate having you on, Chris. That hopefully Michigan does well tomorrow. I know they had a bye last week, so who are they
Yeah,
playing tomorrow?
no idea. I really haven't looked at the schedule. I've been so busy this week. I haven't looked at the schedule, but I will be in front of the TV tomorrow, making sure that I get my football in.
Fair enough. Yeah, let's get our brisket, make it happen. So awesome.
Absolutely.
Awesome. Thank you,
Mason,
Chris. Really
thank you.
appreciate you. Yeah. Hi, everyone. So if